Now speaking, Gunnar Hansen, Senior Director, Investor Relations. Veeva Systems reported their first quarter fiscal 2024 earnings for the quarter ended April 30, 2023. During the call, the company discussed forward-looking statements regarding trends or strategies in the anticipated performance of the business, including guidance regarding future financial results. They discussed non-GAAP metrics as well that may aid in understanding their financial results. The company warned that actual results may differ materially from what was said on the call, and they disclaimed any obligation to update or revise forward-looking statements made during the call. Now speaking, Peter Gassner, Chief Executive Officer. We had a successful first quarter of the year, with total revenue coming in at $526 million, above guidance. The macroeconomic environment was stable and we saw strong execution across both our research and development, R&D, and commercial divisions. Our demo of Vault CRM at Summit was well received and we anticipate having our first customers utilizing it in early 2021. We announced 2 new Compass data products and an AI application, CRM Bot, for Vault CRM. Our development cloud services also saw continued growth throughout all areas. Our product strategies in both R&D and commercial are clear and provide a long runway of opportunities for growth. Robert W. Baird & Company analyst Joe Vruwink inquired, what feedback did customers and partners provide about Vault CRM at the Commercial Summit, and how has it informed or changed your plans for introducing the product in 2024 and 2025? Paul Shaw replied, Joe, Summit was a huge success. We had nearly 2,000 attendees who were excited to see our showcase of Vault CRM. In particular, customers liked the fact that they get full functionality from our Veeva CRM investments and be able to take advantage of new features like Service Center and generative AI. We also detailed an approach to help industry transition to Vault CRM, which customers were very pleased to hear. Overall, the event generated positive feedback on our direction in Vault CRM. Robert W. Baird & Company analyst Joe Vruwink inquired, how has Veeva been able to continue meeting its expectations in the face of a dynamic macro environment? What factors contribute to this success? Peter Gassner replied, this is Peter. Generally, the industry operates on long cycles and our established customers are unaffected by macro environment. However, we have seen some pressure in emerging biotechs with small customers who don't have approved products when funding gets tight. We haven't seen any major changes in the last 90 days, so our business continues to move forward. Oppenheimer & Company analyst Ken Wong inquired, Brent, what drove the big spike in unbilled are seen on the cash flow statement? What should we expect regarding its trajectory going forward? Brent Bowman replied, on the unbilled R, there was a decline due to termination for convenience. Despite that, our overall execution on OCF's line was strong. We increased the full-year number by $30 million to $840 million, which is a 20% growth. We feel very encouraged with our performance and outlook for the year. Oppenheimer & Company analyst Ken Wong inquired, can you provide clarity on the removal of TFCs and how it impacted your earnings? Brent Bowman replied, our Q1 results were exactly what we anticipated and our outlook for the full year is unchanged. No surprises here. Raymond James analyst Brian Peterson inquired, Paul, what have you heard from investors about the complexity of transitioning to Vault from existing CRM systems? Are early customers on track to go live at next year's summit as expected? Paul Shaw replied, thanks for the question, Brian. Moving to Vault CRM from Veeva CRM is dependent on the complexity of customizations a company has made and the approach they're taking when transitioning. We're aiming to make the move as easy as possible by keeping the same data model, application, and automating the migration process. Customers could go live as early as our summit next year and we anticipate migrations to begin in 2025, with most happening in 2026 to 2029 timeframe. RBC Capital Markets analyst Richard Poland inquired, your question, could the new functionality, like bots and service centers, help accelerate migrations to the Vault platform in the 2026 to 2029 timeframe? Paul Shaw replied, you are correct, the 2 announcements are related to our Vault platform. We are creating a customer service center that will be integrated with the Vault CRM application and a CRM bot which will also be part of it. Many customers have expressed enthusiasm for both of these developments as they provide full functionality of Veeva CRM and new innovation at the same time. RBC Capital Markets analyst Richard Poland inquired, can you provide an update on Compass and its strategy for taking on the incumbents in the data persona space? What is the timeline for execution? Peter Gassner replied, the right way to think about our full suite of data products for the commercial area is as a streamlined, unified platform. We have patient, which is anonymous patient data with 60 billion rows in the US, and in January we're adding Compass Prescriber and Compass Sales, with projected data on individual prescribers, prescribing patterns, and at state and national level. All these products fit together on one common data model and customers can get all 3 of them for the best product and service experience. Our message is simple: better data and better service. It's just an execution game. William Blair and Company analyst Dylan Becker inquired, Peter, how are you thinking about leveraging AI and machine learning models to automate key processes in the long term, given the unique data sets you have access to? Peter Gassner replied, I'm excited about the role AI is going to play in Veeva's future. We're a core system of record that our customers will always need, so AI can only make it more valuable. We're developing proprietary data assets like Link and Compass, and we'll be creating more applications over time. We'll also make sure our applications fit well with any other AI applications our customers have or develop themselves. Our open ecosystem allows us to be a platform for customers to plug in their own intelligence and partnerships. William Blair and Company analyst Dylan Becker inquired, how has the relative maturation of larger opportunities like Compass clinical data, safety, and quality enabled Veeva's innovation engine to remain strong? How have customers responded to Veeva's standardization approach in their plans for development? Peter Gassner replied, Veeva has been a multi-product company for over 10 years, and the 6,000 people in our organization allow us to do more parallel processing. We are honing our operating model and increasing autonomy to better manage roles and responsibilities. Our deep customer relationships give us the benefit of the doubt and provide clear feedback. Additionally, our integrations with existing products offer an advantage that other companies don't have when they are just starting up a safety product. The result is an innovation engine that puts us in rare air. Morgan Stanley analyst Craig Hettenbach inquired, can you provide an update there? Could you provide an update on your exposure to emerging biotech, as well as any changes to the SMB add-ons from last year? Brent Bowman replied, yes, Craig. As Peter mentioned, our exposure to the emerging biotech sector is minimal, representing only 4% of our total revenue. This includes 1,000 employees with no approved product. Morgan Stanley analyst Craig Hettenbach inquired, what impact are you seeing on add-on sales due to macroeconomic conditions? Brent Bowman replied, over the last 90 days, there has been no significant change in the macro environment. We have already accounted for this in our guidance and are executing well. Morgan Stanley analyst Craig Hettenbach inquired, Peter, what do you see as the impact of the Sanofi announcement on your multi-year target of a 30% CAGR? Peter Gassner replied, I'm not familiar with the specifics of the Sanofi announcement, however, Paul has more in-depth knowledge on that. Paul Shaw replied, what you're referring to? Yes, that's correct. Sanofi recently adopted our Quality Management Suite, which is designed to help improve their documentation processes and ensure higher quality standards are met. Paul Shaw replied, we are thrilled to see that Sanofi has chosen our unified quality suite for their quality processes. This suite provides the technology and innovation they need to streamline and modernize their operations, enabling them to standardize on quality. Our suite is a great example of how our value proposition can play out in the significant market of quality. Piper Sandler analyst Hannah Rudolph inquired, Paul, are customers waiting to adopt all 3 of your Compass products as a suite rather than one at a time? Paul Shaw replied, we've been focusing on customers that can quickly take advantage of our patient data. We've found that it is better data with broader views into the market and more patients and doctors. We haven't yet sold the full suite due to its limited availability, but by January 2021 it will be complete and open up a much larger part of the market for us. Piper Sandler analyst Hannah Rudolph inquired, Brent, could you discuss the monetization strategies for your CRM bot and other AI products? Brent Bowman replied, at this time, our main focus is ensuring that our product works effectively with our customers. We're confident in the potential of our product and are excited about the opportunities that lie ahead. Needham & Company analyst Matt Shea inquired, do you plan to monetize the CRM bot or other generative AI investments, and could additional applications increase revenue per account or serve as a retention tool? Peter Gassner replied, I anticipate that Service Center, which is included with Veeva CRM, will lead to an increase in the number of licenses over time. This can be attributed to the fact that reps who previously did not use Veeva CRM may now be using it due to its inclusion. In contrast, CRM Bot is a separate license and would represent net new users. As Brent mentioned, the pricing for CRM Bot is still being determined as we focus on getting the product right. Needham & Company analyst Matt Shea inquired, what has been your strategy to compete against other data incumbents with Link and Compass, focusing on service quality and integration across the broader platform? Do you anticipate being competitive on price as well? Peter Gassner replied, Link provides real-time customer intelligence to customers, often in a new category. We're creating the market by teaching people the value of such data assets. With our Link suite, we are expanding it out for clinical trials and research sites. For Compass, it's a direct replacement for IQVIA with a more modern solution. It offers fewer moving parts, better data, and better delivery. It's similar to when Veeva CRM replaced Siebel CRM, out with the old, in with the new. We need to execute well to make this happen. Goldman Sachs analyst Carolyn Valenti inquired, what are the circumstances that could lead to a more or less favorable outlook for fiscal year 25 than what was previously discussed? How has your visibility into this outlook changed since last quarter? Brent Bowman replied, thanks for the question. We remain confident in our fiscal year 25 guidance of at least $2.8 billion in revenue and $1 billion in operating income, assuming the macro environment remains unchanged. We are optimistic about the large market opportunity ahead of us and believe we are at the start of an exciting journey. Goldman Sachs analyst Carolyn Valenti inquired, what impact is Veeva seeing from the partnership with Merck, in terms of product roadmap or product adoption? Peter Gassner replied, I'm thrilled with our partnership with Merck. Our open relationship has enabled them to transform their business to be more digital and data-driven. We're learning how to manage customers in a true partnership that starts at the CEO level. This is helping us rethink what's possible, from our delivery strategy to the way we partner with customers. It's been one of the highlights of our year. Guggenheim Partners analyst Jack Wallace inquired, what competitive environment have you seen for the CRM business since the announcement to move to your own platform? How has this affected your larger competitors Salesforce and IQVIA? Paul Shaw replied, thanks, Jack. We still see IQVIA and regional competitors in the market, and we're proud of our 11 new wins this quarter. Our partnership with Salesforce is going well, and although they have the right to compete with us, nobody has yet been able to replicate our depth of industry-specific applications. We remain focused on customer success, innovation, and enabling deep functionality for our sector. Guggenheim Partners analyst Jack Wallace inquired, can you provide more detail about the competitive wins in North America and Europe, and how those compare to those in Latin America and Asia? Paul Shaw replied, most of our customers were in North America, with 1 or 2 in Europe. Many of these were companies commercializing for the first time, while a few were competitive displacements replacing existing products such as IQVIA. Truist Securities analyst Jailendra Singh inquired, can you provide more insight into the funding environment and its impact on project scrutiny? What kind of projects are being impacted, and what does your guidance assume in terms of these projects going forward? Peter Gassner replied, we have seen no real changes in the last 90 days in terms of the funding and project environment. Funding is tighter for small biotechs, and larger companies are more cautious when it comes to justifying spending on the future. This has been incorporated into our guidance. Regarding project scrutiny, it's extra thorough, with extra attention to quality, CRM, safety, and regulatory areas. Companies that focus on discretionary spending or one-off projects have had more difficulty, while those investing in core capabilities have generally done better as they are more thought out and go through. Peter Gassner replied, I'd say that experimentation has decreased over the past 2 years due to increased scrutiny. Truist Securities analyst Jailendra Singh inquired, can you remind us of the drivers behind the growth acceleration you expect from Q2 to Q3, and what should we expect for billings in the second half? Brent Bowman replied, we saw an increase in normalized billings of $5 million from the previous year, a 15% growth rate. Our newer businesses saw their renewal base shift from the first half of the year to the back half, resulting in accelerated billings growth. Additionally, a price increase in CPI was also a contributing factor to our confidence in the acceleration of billings in Q3 and Q4. Barclays analyst Saket Kalia inquired, Peter, could you please describe how Veeva EDC is adding more value and commanding higher revenue run rates than the products customers were using previously? Peter Gassner replied, we are modernizing our clinical data management to add more value. Our electronic data capture system allows customers to build studies faster and make amendments without downtime or data unloads. On average, they pay us less for this improved efficiency, which is a win-win for both parties. This year, we are taking it a step further by developing an efficient, standardized integration between our clinical data management and drug safety systems. This will give customers greater efficiency, and the industry as a whole will benefit from our lower prices and increased value. Barclays analyst Saket Kalia inquired, can you provide more insight into what changed to make the normalized and calculated billings expectations more similar than before? Brent Bowman replied, Saket, for our renewal business, we are normalizing any changes in frequency or code terms. We had a view of what this would look like for the full year entering Q1, and there were a few customers who had changing billing terms. This offset our original outlook, so on a full year basis calculated billings and normalized billings are equal. There may be differences quarter to quarter, but for the full year it nets out. SVB Securities analyst Stephanie Davis inquired, what feedback have you received from your client base regarding the transition away from Salesforce and onto your new in-house platform? Is it appearing on the radar yet? Paul Shaw replied, our customers are very engaged in the conversation about how to best take advantage of our new technology. For the larger companies, this is a big deal that they need to start planning for now. We're working with them to help understand the implications and benefits this will have for them. The last 6 months was focused on understanding what this means, and our summit helped make it feel real. Our customers still have some work to do to get there, but ultimately this will be much easier than any other alternative available in the market. SVB Securities Analyst Stephanie Davis inquired, could you provide more detail on the normalized billings, unbilled receivables and new clients that contributed to it, as well as how you plan to achieve a 80% growth rate in the second half? Brent Bowman replied, in Q1, we exceeded expectations due to an increase in annual billers plus underlying strength in the business. Unbilled accounts receivable and other transactional factors had no impact on our outlook for normalized billings for the full year. Citi analyst Tyler Radke inquired, what kind of customers will be rolling out the Compass suite next year, net new customers or ones displacing IQVIA? Peter Gassner replied, we anticipate a mix of customer types for our patient product, ranging from large customers down to small pre-commercial companies. For example, larger customers may implement only one brand while smaller and more nimble companies may opt for full Veeva replacement. This is similar to the patterns we see with many of our products. Citi analyst Tyler Radke inquired, could you provide an update on how the trends in CDMS have been affected by product and sales leadership departures, as well as how customers are thinking about this in the current environment? Peter Gassner replied, overall, I'm extremely pleased with our progress in the clinical data management area. We recently had a top 20 customer go live on our core EDC product in just 6 months, an incredibly fast timeline compared to the average of 12 to 18 months or even 2 years that customers usually take. This will create momentum for us and our customer will be talking about their success at our R&D summit in fall. Additionally, the competitive environment has not shifted since we entered it, which is encouraging. Lastly, we're making early progress in areas such as randomization, trial supply management, and ePro, patient-reported outcomes, which no other company has ever done before. Our goal is to become a leader in all 3 categories and create an integrated suite of products that are effective for clinical data management. Cohen and Company analyst Charles Rhee inquired, Peter, what impact has the current environment had on Crossix's revenue growth? Has it improved? Please provide us with some more details. Brent Bowman replied, Brent here, that's a great question. We've seen no change in the macro environment over the past 90 days, which also holds true for Crossix. We experienced some headwinds in marketing budgets towards the end of last year, but it remains unchanged. Despite this, we remain excited about the opportunities and potential it holds for our customer base. It's strategic and meaningful. Cohen and Company analyst Charles Rhee inquired, Brent, could you provide more insight into the expected mix and cadence of sales and marketing expenses in light of the guidance on a step-up in operating margins to 30 to 34%? Brent Bowman replied, could you tell us how the investment spending will flow throughout the year? Investment spending will increase incrementally over the course of the year as we have field kickoffs, commercial summits and R&D summits each quarter. Q1 was an exception, with a larger investment due to the field kickoff, but overall it will be relatively smooth in terms of expenditure. Wells Fargo Securities analyst Stan Berenshteyn inquired, could you provide an update on the reasons behind the switch from their legacy EDC provider and who it was? Peter Gassner replied, we are replacing incumbents such as Metadata and Oracle with a modern solution offering better customer relations, faster clinical research study building, change management, and integrated clinical operations and data management suites. Our solution removes the burden of integration from our customers. Wells Fargo Securities analyst Stan Berenshteyn inquired, can you provide us with updates on Crossix and global pharma sales rep numbers? Are we seeing any changes in growth rates? Peter Gassner replied, in terms of Crossix, our business continues to grow. We are leveraging the core data platform to integrate sales and marketing more tightly with our CRM system to create a bidirectional flow that customers are eager to adopt. This will help create more consistent growth quarter over quarter compared to traditional marketing campaigns. Additionally, we are committed to Crossix and are actively converting customers to enterprise license agreements. As for pharmaceutical sales reps, Paul can provide more detail. Paul Shaw replied, yes, I can provide an update on the reductions. Most have already been implemented and the remaining ones will be done by the end of the year. We expect it to be slightly less than the 10% we projected. As for the quarter, there were minimal reductions as expected. Bank of America Merrill Lynch analyst Natalie Howe inquired, can you elaborate on the success of Vault QMS, particularly with regards to the top 20 pharma, and how you plan to capitalize on the quality segment opportunity? Peter Gassner replied, we've been building our quality suite for 10 years, and customers are taking notice. Our core established products like Quality Docs, QMS, and training are gaining traction as people realize Veeva is the better alternative. Our newer products such as validation and LIMS are in the early stages, but customers are beginning to understand their potential. We anticipate a long replacement cycle as customers move to Veeva, creating a long runway of growth for us in the future. Peter Gassner replied, "Thank you to our customers and Veeva team for their hard work this quarter. We appreciate your continued support and dedication."